Japan has become the last country to finally ditch a policy of negative interest rates. But even after the shift, the cash rate will be very low at 0 to 0.1%. Our North Asia correspondent James Oaten has more.
This is the first Bank of Japan rate rise in 17 years. It's hard to imagine in Australia that a rate rise would be considered good news, but that's exactly what's happening here in Japan. The economy has been weak for so long that the cash rate has been kept ultra low, entering negative territory back in 2016. But that era is now over. So what are negative interest rates? Well, it means the Bank of Japan charges financial institutions to store their cash rather than give them interest. The idea is to encourage these institutions to use their money elsewhere, spend, invest, stimulate the economy. It's something European nations have also tried, but Japan's economy has been particularly sluggish. Now there are signs things are changing. Wages are finally on the move.
Yes, I think it's very good news. I mean, it's been long waited. To be honest, I can't think of another country that wants to raise interest rates. And of course, now they have. Well, certainly, I mean, wage rises this year are probably going to be the largest that's been seen in 20 odd years, maybe even longer than that, to be honest.
One of the consequences of negative interest rates is the currency, the yen, has dropped in value against things like the US dollar. It's good for exporters, their products become cheaper, but imported items become more expensive, and that's really driving up the cost of living here. So an interest rate rise could create some relief there as well. Now, a variable home loan in Japan is well under 1%, while a fixed rate home loan is a bit over 1%. Again, hard to imagine in Australia, but wages here have been flat for decades. So a shift in interest rates is showing that things may finally be changing for the better.